1992 was the last time we saw the type of short presence, according to the CFTC, in 10-year notes. I find that fascinating, but I also caution it could be hedged and wedged against much different positions on the long side. But generically, what does that statement tell you, Andy?
Rick, there's a big short base out there. They've been looking for higher rates. Granted, some of it is wedged and hedged. But, you know, they're still looking for, a lot of the trading types, fast money, are looking for higher rates, and they may get them. But I think they're going to get stopped out first.
Yeah, you know, it's fascinating. I always believe congestion is important in technicals. 280s, a lot of congestion. We're at the low end of that spectrum, and now the 290s are above us. As counterintuitive as it seems, you think we're in for a test of the 275 level before we get back over 290?
Rick, I think you're going to go even further than that. I think you blow through the head and shoulders resistance at 280. I think you get down to, you know, maybe as low as 265 to 260. I really think that's where you're going to go.
Now that's really counterintuitive. Yeah. Let's look at the fundamentals. You know, we have huge deficits. Well, let me preface that. We have growing deficits on one side. You have the economy growing due to stimulus on the other. And the 10-year kind of caught in that crossfire. But certainly not many would have thought that the answer would be lower rates. Can it continue, or do you think by year end the amount of size being auctioned off will take its toll?
Rick, you have so much stuff going on right now with central banks and problems in the world. I mean, the Chinese economy is slowing down dramatically. EMG is now in bear market territory. You know, Italy is about a month away from putting forward a horrible budget, and that could blow out the European Union. No one is anticipating that, or very few are. And, you know, and I think it's going to continue. I think Powell's speech this Friday is going to be key in determining where the Fed's going to go next. Some are anticipating that he's going to say something about slowing down, not so much the rate hikes, but slowing down the amount of unwind that the Fed is doing. I don't see it.
That's interesting. Let me interrupt you, Andy. Yeah. Let me interrupt you. So for people watching, Jackson Hole, the annual get-together by all the central bankers of the globe and others, will begin on Thursday in Wyoming. And Jay Powell, the head of the Fed, will give a speech Friday. And you think maybe there's a chance that he's going to veer off course. Tell us why you believe that again.
Rick, I think emerging markets is in terrible trouble. And even though the Fed says they don't care about emerging markets, it's only a matter of time before weakness in emerging markets starts showing up in numbers here in the U.S. You've seen it in sentiment numbers, but you haven't seen it in hard numbers yet. So I think he has to take a real hard look at this. And it's not about the higher rates in the U.S. It's about the availability of dollars in emerging market countries. And the more that the Fed unwinds, the less dollars are available. And I think he's going to send us into a tailspin.
This is the first crack magnified by the fact that all these central banks want to go the other way, want to start removing some of this stimulus. Are we going to see more of the same? Are there other unforeseen, unintended issues that will be exaggerated by the receding water? Final thought.
Rick, we are clearly in the area of unintended consequences. You've had 10 years of quantitative easing, and you can't think that all of a sudden you can reverse it in 1 to 3 years. It's going to take a long time, and there's going to be a lot of pain. So get ready, buddy, because we're going to have some real turmoil.